So this market cycle model is an on-chain model. It's based on analysis of all the on-chain transactions of Bitcoin. There was no yellow, no distribution phase, end of the bull market phase and going to the bear market phase. There was no yellow in March. There was red, bull. So I knew that although it's a very weird, long, flat bull market, that the bull would continue. And in my opinion, from now on, we'll see new all-time highs. So that would be 110K and higher, followed by more monthly close all-time highs. Usually those all-time highs, they're not alone. They come in groups.
Bitcoin's market cycles have always danced to a familiar rhythm until now. The on-chain market cycle model, a revolutionary way to track Bitcoin's movements, is rewriting the rules by analyzing every transaction etched into the blockchain. Unlike traditional charts or hype-driven predictions, this model cuts through the noise, relying solely on cold, hard data. And what it revealed in March sent shockwaves through the crypto world. The usual distribution phase, the classic warning sign of a bull market's end, never appeared. Instead, the blockchain flashed red, a clear signal that the rally wasn't done yet. PlanB, the enigmatic creator of the stock-to-flow model, saw this anomaly and knew exactly what it meant. This wasn't the end, it was the calm before another surge. Despite the market's strange, sluggish sideways grind, the data screamed continuation. Now, the stage is set for Bitcoin to smash through its previous all-time highs, with $110,000 as just the first stop. History shows these peaks rarely come alone. They arrive in clusters, each monthly close pushing higher than the last. With Bitcoin's scarcity tightening and institutional adoption accelerating, this could be the most explosive phase yet. The blockchain doesn't lie, and right now, it's shouting one thing: buckle up. Let's watch clips from PlanB's explosive Bitcoin analysis to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So Bitcoin had a V-shaped recovery after all. Bitcoin jumped from 82K end of March to 94K end of April. And now, as we speak, it's at 104K. So this V-shaped recovery is a bull market sign. And okay, we're still far off from the stock-to-flow 500K average for the 2024-2028 halving cycle. It's an average, right? We're still far away from that. But we're only 1 year in. Only 1 year into the cycle and 3 years to go. Fundamentals are very good. Bitcoin is 2 times as scarce as gold, but gold is 10 times more worth than Bitcoin. So Bitcoin remains super undervalued, in my opinion. So many called the bear market when Bitcoin was 82K the end of March. But I remained bullish. Why is that? Mainly because of this chart, the market cycle chart. Now, if we look at RSI, the relative strength index, currently it's at 66. And that's around the average RSI level of 65, the dark area here, the black area. And it has been around that average for more than a year now. In my opinion, how I read this chart is that Bitcoin spent a couple of years below that average of 65. And from now on, it will stay 1 or more years above the 65 average. In fact, I think we will see 80 plus RSI months again, at least 4 of them, just like in the bull markets in 2021, in 2017 and in 2013. So I think we'll see those high RSI numbers again, at least 4 times. And those high RSI numbers are associated, of course, with high monthly returns of over 40% per month. So if we have From the current level of, well, on average 100K, 4 months of 40%, that would bring us already in the 400K area, which is not inconsistent with the stock to flow model.
Bitcoin just pulled off a textbook V-shaped recovery, silencing the bears who called the top at $82,000 in March. In just 2 months, it rocketed from $82,000 to $94,000, and now, as we speak, it's trading at $104,000, a clear bull market signal. And yet, despite this explosive move, we're still light years away from PlanB's stock-to-flow model prediction of a $500,000 average price for the 2024 to 2028 halving cycle. But here's the shocker. We're only 1 year into this cycle, with 3 more to go. So why did so many panic when Bitcoin dipped to $82,000? Because they weren't looking at the market cycle chart. This powerful on-chain tool revealed the truth. No distribution phase, no bear market, just a coiled spring ready to launch. Now, the stage is set for new all-time highs, with $110,000 as the first target. And history shows these peaks never come alone. They arrive in waves, each monthly close higher than the last. Even the Relative Strength Index, RSI, currently at 66, tells a bullish story. After years below the 65 average, Bitcoin is primed to spend the next 12-plus months in overbought territory, mirroring past bull runs like 2013, 2017, and 2021. Back then, we saw RSI readings above 80 at least 4 times, each accompanied by 40% plus monthly gains. If that pattern holds, just 4 months of 40% growth from today's $100,000 level would catapult Bitcoin to $400,000. Suddenly, stock-to-flow's $500,000 target doesn't seem so far-fetched after all. The bottom line is, this bull run is just getting started. Buckle up, volatility is coming, but so are life-changing gains. However, while PlanB's on-chain metrics reveal Bitcoin's explosive potential, Willy sees an even bigger revolution brewing. One where Bitcoin isn't just breaking price records, but rewriting the entire financial playbook. Let's watch clips from his interview.
I would also say most people have exposure without even knowing it because they own the S&P 500, which includes Tesla, which owns Bitcoin, and more of that's going to happen. Like, they don't even know they're a citizen of country and the country owns Bitcoin. You know, that's just everywhere. Even if they haven't bought it themselves, it's there because it's a part of every portfolio that they have. I mean, it's really interesting and good to see the spot ETF come in and companies like MicroStrategy come in and buy it spot, right? They're buying spot, the underlying asset, instead of buying exposure to the futures market. And so we have had a spot-driven bull market, and that's usually a pretty safe place to be. I think my friend Samson Mao is always talking about the God candle, and of course he's always talking about nation states. He's talking to nation states, so he's super bullish. And maybe he's right. I would just say, because I'm more of the quant guy, you just have to work out how much capital needs to be put into the network to push it up. Okay. And so, is it 1.6 trillion today? It's getting on a multi-trillion-dollar asset. It trades like macro. If we want to push up, we want to if we want to go 1.5 trillion to $3 trillion, so doubling the price, that's a significant amount of capital that needs to go into the network. It's not like Chamath and his buddies buy Bitcoin at $3 and it goes wee all the way up to $1,200 anymore. It's got to soak up decent nation state money, and you might get a doubling or a tripling and so forth. It's going to take time. So I'm with you on that sort of steady, like the picture you painted with Amazon stock with dip opportunities. It's going to be like that. It's not going to be this reflexive boom up like this exponential curve that you saw in 2017. Yeah, it's different nowadays. That's how I see it. How underlying structure-wise, that's how I see it. and also we're very highly correlated to macro. We're just another macro asset. Bitcoin is just another macro asset these days. I don't disagree that the floodgates are opening, but it's not a floodgate of fast-moving dam water, right? It's floodgates of a slow-moving glacier, right? It's like it takes time, right? Do you know it's taken 4 years for MicroStrategy to actually gear up and really buy Bitcoin? 4 years,
What do
right?
you mean by that? What do
Like
you mean
you,
by that?
you look at their balance sheet, how much Bitcoin did they really stack? It's all been the last year. The
Oh, I see.
the
Yeah.
the right first thing he's got to do is like he's got to convince the board. That was before they even bought their first Bitcoin, right? And then they needed to inform their shareholders and provide a way in which the shareholders that were against it that they can sell their shares. By the way, this is because Michael Saylor owns by far the vast majority of MicroStrategy's stock. It's a little bit like Musk, where he controls so much of the company, what he says he can leverage. Even that took 4 years for them to really gear up and buy Bitcoin. If you look at the US government's strategic reserve, probably take 18 months. 6 months if miracles happen, like it take 18 months. And you look at a publicly traded company that is not like Elon Musk or Michael Saylor, where there's a founder with massive control. The board can't buy. They can buy a little bit, like a little test, fraction of a percentage point, where it won't change the day-to-day operations of the company. Do a bit of this. Eventually, they have to take it to a full vote of all shareholders, and even then, there's this massive stuff you have to do to get the company in line where they can start to bring it on board. That it takes years, as MicroStrategy has shown you. So when you think about a nation state adopting it, it's going to take time, right? Like we talked about institutions, the company, the spot ETFs come in, and they thought they were going to pile in. No, that like it'll take 6 months to years before the operational due diligence of these very large institutions, mutual funds, have completed the full due diligence of all the underlying custody and how the ETF works and so forth. It takes time before. And so, when was the ETF? It's when did it launch? How many months into it are we? 18
No, it was
months or
January last year. It was January last year. Yeah.
yeah,
January
so
11th
not
or
even
12th.
18 months into it, right? And this
Mhm.
is around the time where some of the institutions can come in, right? And so
Yeah.
it's just all these taps turning on, but it's going to take a while for it to get the flow up. Like I'm going to ask you today, how much do you think is being put into the Bitcoin network?
I don't know. I haven't looked at it.
$482 billion in the last 16 years. And how much has MicroStrategy put in and the ETFs? Big chunk of that.
35.
If you have a nation state buying it and you enter a bear market, the politicians that instigate it ain't going to be too popular until the next bull market. There are like a lot of and if the nation state, there's political dynamics that are happening, and there's bull market cycles happening there too. I think UAE was thinking of adding a sovereign wealth fund back in 2019. That was definitely the case, and they already said I was going to take a year of figuring out how to do it. And yeah, like this takes time, and then when they turn it on, they test it with little trickles, and then
Yeah.
and so $842 billion, people. That's how much been put into the network. Even though the market cap's doubled that, so we've got a 2-to-1 ratio. So if we want another trillion growth to 2.5 trillion dollars, we got to find another 500 billion. There's 842 billion that's been put in. These are the numbers, okay? These are
Yeah, it's not
the
hard. What I'm
ballpark
saying,
numbers.
that's pretty easy when you consider that MicroStrategy alone has got like 35 billion. Their cost basis is, I think, 35 billion for what
Yeah,
they.
so we just need another, I don't know, 13, 14 more MicroStrategies, and whoop, we're going to get our $1 trillion, which is going to push price up 66%. These are the
So
numbers, right? We're not going to
yeah.
get 10x in in the next 3 months, right? We're not going to get $150 to $20,000 in 1 year. It's a big moving ship, and people don't grapple. That's the type of capital. We're talking large trillion-dollar assets.
You might not realize it, but there's a strong chance you already own Bitcoin, not because you bought it yourself, but because it's quietly embedded in your investment portfolio, your country's reserves, and even the companies you interact with daily. Welcome to Bitcoin's new era. No longer just a rebel asset, but a $1.6 trillion financial force that's reshaping global markets in slow motion. This transformation isn't happening through wild speculation or overnight pumps. Instead, Bitcoin is being absorbed into the mainstream financial system through institutional adoption, corporate treasuries, and even national economic strategies. The revolution isn't coming, it's already here, moving at the deliberate pace of big money. Consider the S&P 500, where companies like Tesla and MicroStrategy hold billions in Bitcoin. If you own index funds, retirement accounts, or even certain government bonds, you likely have indirect exposure. Nation-states are accumulating too, from El Salvador's bold legal tender move to the U.S. government's massive stash of seized Bitcoin. The asset has become so intertwined with traditional finance that avoiding it completely may soon be impossible. The January 2023 launch of spot Bitcoin ETFs marked a turning point, but not the explosive moment many expected. Instead of an immediate surge, we've witnessed a methodical buildup as institutional investors navigate compliance checks and risk assessments. This gradual adoption reveals a fundamental truth. When billions move, they don't sprint, they march. MicroStrategy's journey offers a blueprint for what's coming. Their transformation from software company to Bitcoin powerhouse took 4 years of boardroom battles, shareholder negotiations, and financial restructuring. Now imagine this pattern repeating across Fortune 500 companies, because it will. The corporate world is just beginning to understand Bitcoin's role as a treasury asset, and the implications could redefine corporate finance. Nation-states move even slower, but with greater impact. While El Salvador made headlines with its Bitcoin embrace, larger economies are taking cautious steps. The UAE has explored sovereign holdings since 2019, and the U.S. government's Bitcoin reserves rival those of major funds. Political cycles and risk aversion mean national adoption will be measured, but the direction is clear. Bitcoin is becoming part of the global monetary landscape. The math of Bitcoin's future growth reveals why this gradual accumulation matters. Doubling today's $1.6 trillion market cap requires another $1.6 trillion in inflows, a sum that can only come from institutional players. Spot ETFs might contribute $100 billion annually, corporations another $50 billion, and nation-states potentially hundreds of billions over time. This isn't speculative fantasy. It's the predictable movement of capital into an asset with fixed supply and growing recognition. The coming years will likely show Bitcoin's price appreciation following a new pattern. Steady 100 to 200% gains per cycle rather than the wild 1,000% spikes of early days. Expect dips and consolidations as large buyers accumulate, with volatility decreasing as institutional participation grows. The days of Bitcoin moving 20% in a day may fade, replaced by more sustainable growth that reflects its maturing market structure. The true paradigm shift will come when key thresholds are crossed. Spot ETF inflows surpassing $200 billion, a second major corporation following MicroStrategy's lead, and a G20 country officially adding Bitcoin to reserves. These milestones won't just move markets, they'll cement Bitcoin's role in the global financial system. What emerges is a picture of Bitcoin's future that's both exciting and fundamentally different from its past. The asset hasn't lost its potential for significant appreciation, but the path there has changed. Retail investors chasing quick riches will give way to pension funds, managing long-term allocations, corporations optimizing treasuries, and nations diversifying reserves. The beauty of this transition is that it's still early. The institutional wave is building, but far from its peak. For those who understand this shift, the opportunity isn't just about price appreciation. It's about positioning ahead of a generational change in how the world stores and moves value. Bitcoin's next chapter won't be written in the frenzied tweets of crypto influencers, but in the boardrooms of multinational corporations and the policy meetings of central banks. The revolution has gone mainstream, and the smart money is already moving. The question isn't whether you should participate, it's whether you'll recognize how deeply you're already involved. This is Bitcoin growing up. This is finance evolving. And for those paying attention, it's the opportunity of a lifetime unfolding in plain sight. The only question left is, are you ready for what comes next? As we wrap up, how high do you think Bitcoin goes in 2025? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.